The Federal Reserve raising interest rates for the first time in a year and the second time in 10. Lifted by the Fed funds rate a quarter percentage point. The central bank also forecasting slightly faster increases over the next few years. So what does it all mean for the markets and your money? We bring in James Hughes once again, Chief Market Analyst at GKFX, and he joins us this morning. James, so we got the rate hike yesterday. Now we hear 3 instead of 2 next year. What does this mean for consumers and investors? Why does this Fed rate hike matter to them?
Well, of course, the big thing is, and the one thing that we hear so much about throughout the world is, of course, debt payments, mortgage payments. And the big area that has been a focus whenever we've got the non-farm payroll figure at the start of every month has not been that non-farm payroll figure or the real unemployment rate itself, but it's been those average earnings numbers. And that's been the key thing that the Fed's been looking at as waiting to get this rate hike in place. We want to see those average earnings numbers continue to rise. Now, they have been rising, but not as steady as what we'd all like to see. And I think from a consumer point of view, that is obviously the key point of view. We need to see that average earnings number continue to move to the upside if these rate hikes are going to continue at the sort of pace that Janet Yellen is saying that she wants them to, 3 next year. Average earnings need to move in the same direction.
Yeah, that's a good point, because this means money coming out of consumers' pockets, James. If you look at the 30-year mortgage rates here in the U.S. are at a 2-year high. If you look at the average loan on that, if you get a full percentage point increase in the rate, that's $50,000 being added to the life of your mortgage. So it's real money coming out of people's pockets. Do you feel that there's confidence where you are, based on the people that you talk to, that Donald Trump will grow the U.S. economy and the economy will be able to handle 3 interest rate increases in 2017?
Yeah, I mean, I think there is. I mean, I think, especially from over here, I think we're more a little bit worried about our own Brexit mess that we have at the moment, rather than Donald Trump. But I think, in terms of Donald Trump, I think that there is definitely a focus in trying to make sure that this sort of rally that we're getting in markets translates into actual fiscal policy, which is going to be beneficial going forward. There are, of course, fears of continued spending and aggressive spending in the economy to boost it. Okay, in the short term that does work, but in the long term, we know that causes a lot of problems.
Right. And that was the idea, to have fiscal policy and monetary policy working together. James Hughes, Chief Market Analyst at GKFX, thank you so much. Thanks a lot.
Thanks, James.